Hey, it's Danielle. Welcome to the free video and happy Monday. So today, as you know, we have a runaway market. And you know what I love trading in runaway markets is short squeezes. Now, Tesla is a pretty good one to trade on the short squeeze because they always have a ton of people shorting this stock. And what inevitably happens is stuff like this, where you have the shorts getting squeezed out all at the same time and buyers coming in. Now, what's more interesting to me about Tesla this time around is that it's right near this previous high, right at 389.61, and you're currently trading at 381.50. So when you get right at that previous high, I mean, that's really where the shorts will start to get nervous and they'll start to cover, especially if you notice today it's at it was up 6%, almost 6.5%. And luckily, I wasn't even paying attention to this whatsoever, but it was John actually that posted the alert initially in the options room that he was getting into Tesla. And so I looked at it and I thought, I haven't traded Tesla in a while. And the reason why I felt like it was different this time is because, throughout all of this, it's a little bit more difficult to trade a short squeeze because you have all of this resistance. But when you get up to this area, all you need is a little bit of a catalyst, like a tweet, Elon. Just kidding. Or really what the catalyst is, to be completely serious, is that it closed up over 6%. And so a lot of times what will happen is the next day it will gap up. And so I'm hoping for this setup to play out. John ended up buying some calls. I got a variety of different positions just right at the close here, but I just added these right at the close, but just sold some put credit spreads, bought some butterflies here and here, and then I'll see what happens tomorrow. But, this was kind of in preparation that it could breach that previous high and gap up tomorrow. But if this thing really gets going, if it breaches at 389, then I would expect something like this. So in that instance, I would just start buying a bunch of long calls, and I would be very careful with it, and I would do it like a day trade, and I'd probably buy, the ones that John did actually was, see, John's, he came in here and he got some of these Delta 50s. So it's a good, if you're getting a Delta 50, it's a pretty good midpoint, because you're not paying the full cost of the Delta 70, but yet if it goes in the money, you can get a really good percentage gain on it. So I really like the Delta 50s that John did. If we do end up getting a runaway gap tomorrow, I will definitely add some long calls on top of the butterflies, but I just wanted you to be aware of this potential short squeeze. Beyond that, I also wanted to tell you about the webinar that I'm having on Thursday. So January is one of the best months to trade for whatever reason. You have people putting money in their 401k, hedge fund rebalancing, people just looking at a beginning of a new year. I have no idea really why it works, but looking at January, this is what we're going to talk about. So check it out, simplertrading.com/cash, and join me on Thursday for all of the dirty secrets. Anyways, I hope you have a great rest of your day, and I'll see you in the next one.